Yeah. I mean, it's a couple of things, Daniel. It's actually we call it a regional penetration strategy.
Yeah.
So, I mean, largely how we've actually deployed our network and also found customers, it's usually the urban centers, like any other network. However, what we've seen over the past 3 years actually has been the growth of our own brand, where people know about Telkom Mobile and our propositions. So we actually get into those areas far deeper, where we under-indexed on the market share itself, and we create propositions like Motown sort of type of propositions that are actually tailor-made for that specific market. We acquire the customer, and we actually make sure that we then surface our private pricing platforms to those customers, where they actually then see tailor-made propositions literally for them in those towns. And by doing that, you actually end up keeping them longer on the network. We actually, it's a key measure of our own success as well in terms of days on the network and some of the initiatives that we employ to make sure that customers stay longer. So we've got what I call a CVM team that is actually led by a team of data scientists that are actually using AI and machine learning
Yes.
technology to actually mine the customer data, look at customer behavior, and from there create propositions that actually meet those customer behaviors. So affordable, what I call affordable products at every price point for different customers, from the low end sort of type of customer that buys 5 megabits per second for an hour to a customer that buys 8 gig in essence. So it's not just a price per gig type of pricing. It's literally affordable price points at all customer, let's call it segment, but leading with value. When I say leading with value, we keep certain price points and we just load you with a little bit more data, and customers are loving that and lapping it. And that's where we've been seeing growth from the mobile business. Yeah, I mean, our strategy is not set on really targeting specific companies or operators. We literally look at areas, addressable market, and say, so at some point we're sitting at about 15% market share. We said if you get to 15%, that's sort of, you're in a survival mode in essence. But when you get to 20%, you're really on the table. You can actually sustain a business for a much longer period of time.
Revenue market share or SIM market
No, SIM market share. SIM market share. And then when we got to 20% SIM market share, then we said, okay, how does revenue market share look like?
Yes.
And we have a target for that. And actually, we just create propositions in the market, gain market share. We are growing market share. And I think we're winning from everyone. We're not targeting anyone specifically. We're just focusing on what customers need, and we're actually providing those services to customers via our own phone propositions. So, I mean, we're fortunate enough because we built a data network, right? So 4G to 4.5G, so which actually makes it easier for us to actually switch to 5G in essence, because the radio equipment that we have is actually 5G enabled. Our core is also 5G enabled at 4.5G. So we continuously deploy 4.5G to meet customer needs. And the ecosystem, as it grows with more handsets getting into the market, we actually have done that in the past, I think so 24 months. We did launch 5G in selected areas, but we sort of over-indexed on fixed wireless, which is the LTE routers, because we're seeing a lot more traffic in that instance. As customers are actually buying a lot more 5G routers, it's easy for us to just switch it on for that particular area because the network is ready to do that. So it's a question of having the customer base buying a lot more routers or fixed wireless routers, and or mobility customers having a lot more what I call smartphones. A lot of smartphones are 5G enabled in essence. So where we have 5G, for instance, in some parts of Joburg, on the Telkom network, you can actually access it as well. And we're actually monitoring it. If there's certain customers in certain particular areas where we're seeing a lot more smartphones just on 4G, it's also part of our migration strategy to actually manage the network capacity. So we offload to 5G, and also we offload some customers on fixed wireless to actually fiber. So we fiber those customers, and then it creates capacity in the network. Therefore, we can create better propositions. So we are 5G ready. We actually have 5G on our own network, and we've launched it 2 years ago. All we're doing is we're switching it on gradually as the customer ecosystem is changing. What we've picked up, customers are not willing to pay more for 5G handsets or even 5G propositions, because these handsets that are now 5G enabled actually worked well on 4G.
Yes.
And the speeds and latencies and everything was actually working well, very sufficient. Even on fixed wireless as well, you can actually stream easily on 4G and get better speeds. I mean, most of the streaming platforms require you to have 5 megabytes per second, and you're getting like 50s and 100s. So it's efficient. So customers are just not willing to pay because it's a newer technology. They're saying, I'll pay more if you give me something that's completely different. So you just have to watch their behavior and how they are buying patterns and be able to meet it. So we actually have it and we can just switch it on. So let me start with the balance sheet. I think we're in a good space because we've re-engineered the balance sheet. Actually, we got into net debt to EBITDA lines before even the Swiftnet proceeds come into play, just because of the underlying operation and the cash generation that we've been doing in the business itself. So we're sitting in a pretty good spot. So we've got headroom in terms of what facilities we can access if we wanted to go aggressive on our capex spend. However, we've been measured how we've been spending money on capex. Let's take mobile as an example. We've said everyone has to fit into the 12 to 15% envelope. And the mobile team has been spending in and around 3 billion and also on fiber as well. However, in the fiber business, there's a bit of mobile backhaul that gets provisioned into our mobile towers as well that gets spent by the fiber guys in OpenServe. We're sort of comfortable with those levels, even on mobile as well. So we're sort of following a a demand-led type of network rollout on both mobile and fiber. So let me start with mobile. On mobile, we're roaming. We're sort of using roaming traffic as a proxy to see if we've got a lot of customers in that particular area. As we're going deeper into those areas, right, which is the regional strategy, we then look at offloading those customers from the roaming partners into our own network by expanding the network. It's either we'll use low band or we'll actually do what I call a new site build into those particular areas. On the OpenServe side as well, everyone has been chasing to pass homes.
Yes.
But we've been really very delicate around how do you actually manage the conversion rate, because that's how you monetize the network. Otherwise, your ROIC will start get depressed. So we've sort of been saying at 50% connection rate, we're actually quite comfortable because we can meet those customer needs with both technologies, either fixed wireless, and then you see the traffic growing, and you offload into fiber. Then we build the fiber network into those areas. When we see the customer willingness to actually even move from fixed wireless to fiber, because it's not always a one-for-one, because some customers really like the flexibility that comes with routers, because you can move them from one house to the other. And what we've seen, especially in Johannesburg and the major centers, you're getting a lot of what I call people that are renting houses, not owning houses, because they're renting and they're changing leases almost on a yearly basis. They'd like the ability of moving with their router. So therefore, at times, what we found is that you lay out fiber, but no one is connecting and taking up the offers. But also, at 80 plus 80 for 249, and your lowest fiber price point is like 399, which is not really great, but the real fiber is like 599. So you find customers looking at pricing and say, this is sufficient for me. So we're really following a demand-led strategy of really expanding the fiber network. We welcome any innovation, right, into the industry. Maybe let me talk about satellites, right? We actually have satellite partners where we're selling, maybe it's largely Geo, where we're selling those propositions to areas where we don't have network or where it's actually not commercially viable for us to deploy the network. They're quite expensive, and also for those end customers as well, and they've been complaining, right? And we've been trying to find ways of meeting them. Now come LEO satellite providers, such as Starlink, right, or even the Amazon, or even the Chinese. We actually see them as augmenting our own propositions right into those customers where, because we've been partnering before, we actually will partner with those ones. We don't really see them as competitors, rather than more partners that we can work with to reach areas where we potentially were not even reaching in terms of our own technology, because satellite can actually do that. So that's how we think about it.
Okay, so you can partner with them.
We can partner with some.
But you also end up competing in some areas.
You compete in some areas as well, because I think it's different, what I call it's different folks for different strokes in a sense. So you take a typical farmer, right? Their broadband needs might be met by a satellite provider, right? But if you take someone smack bang in the middle of Johannesburg, where broadband capacity is actually constrained, and having a satellite solution into Johannesburg for that particular customer or business, because congestion is quickly going to hit, and the spectrum that everyone is using at the same time, then you find that fiber is actually quite suitable, or even fixed wireless for those particular customers. So it's a combination of where it works for customers, we partner with someone, we bring it to the customer. I mean, it goes back to our strategy, right, of saying we're an infrastructure player at the heart of everything. And we've actually seen how, if you're to sweat your infrastructure, what it actually does at a customer level, where you are able to monetize and gain market share in mobile, and actually convert a lot more homes to paying customers on the fiber side. So therefore, if you really look into the core of that strategy, particularly, we're not going to sell our fiber assets. I don't think we're looking at any strategic partner. And when we looked at it before, it was a question of the balance sheet wasn't really at the right levels. Maybe you need a different type of partner to actually ingest money to the business and invest for a longer period of time. We're a space where our balance sheet can potentially do that, but it's also not a fiber business case as a standalone business case. It's a fiber, mobile, and also any other services that you can overlay on top of it. When you look at it that way, then the actual profile of the capital that you have to spend changes, because you can monetize quite, quicker via mobile and fiber, because it's a long-term game. If you do it for enterprises and overlay what I call IT services from a BCX point of view, you could actually also monetize that even much quicker. So therefore, you might not actually need a strategic partner that's actually going to ingest capital, because you can actually raise capital much easier. But our strategy at its core, really, if you're to think about it, we won't sell OpenServe. We're not looking at a strategic partner for BCX either. We're trying to make sure that we almost reposition the business for future growth, because the enterprise base of customers is core to us. If you remember, the Telkom of the past was largely an enterprise business. We've kept most of those customers, albeit at a smaller margin and also smaller revenues, because a lot of them have migrated from the old voice technology to either fiber, which is voice over fiber, which is now you can't charge per minute, as an example, or to Teams, which is what happened, post-COVID. So it's a key customer segment that would really like to actually hold on to. BCX brings in a lot of what I call strategic partners with larger OEMs, your SAPs, Oracles, Alibaba, and so you can actually source a lot of applications and become a system integrator for those particular customers. So it's actually quite core to our own business. Yeah, we're always on the lookout, right? If someone comes to us as well, we can never say no. We usually just go through a business case and evaluate it and look at the merits of that proposition, if it actually fit in with our own business, but if it also allow us to get into areas where we're struggling to get into. It's a question of just evaluating any propositions. So consultation is inevitably going to happen, because at these capital expenditure levels, and also with the dwindling customer base and less disposable income, it's going to become much more difficult to monetize any investment that you have in the short to medium, actually, up until the South African economy really starts growing. Then you might actually have an argument of of operators being able to just operate on their own. It's a very expensive exercise, if you ask me. Yeah, we've got a couple of data centers, and some of them are actually quite at the right levels. I think it's like level 5. And the way we think about it is, maybe first and foremost, is how do we actually fully monetize it for own use, rather than using other data centers. And I think we've done a lot of work within that space as well, but also just operating them efficiently as well, because it also gives you a bit of a head up in terms of the type of power resilience that we've created for a data center that you don't have to buy elsewhere, in essence, when you're hosting your data with some of these other guys as well. But what we're also seeing in the enterprise space is it's an emerging demand of what we call edge computing, which could potentially become a new business for edge data centers across the country. Everyone is basically located in Johannesburg, possibly at Terraco, at some point, as the other regions are starting to consume a lot more data. And it could be government, as an example. Think about the Department of Health with hospitals, where they're looking for better latencies and better performance, or even the Home Affairs. Actually locating that data much closer, and some of our data centers are actually closer to some of those public sector services organizations, including our own old exchange buildings that could potentially be converted into edge data centers. So we're seeing opportunities there, and it's been a similar trend that we've seen in Europe and also in China as well. And we're thinking in South Africa, possibly it's also coming as more enterprises are consuming a lot more applications, as more consumers are consuming a lot more OTT applications. You might find some of the larger OTTs might want to start terminating data in the country and actually get it closer to some of their customers, or even regions between Cape Town, Durban, and Johannesburg. So there's opportunities for us. No, it's sufficient for our own needs. Sufficient for our own needs. And when you get into this new business sort of area of edge data centers or edge computing, we'll then sort of evaluate if we actually have to build any new, but we don't think we'll have to build any new. You could potentially, because some of our exchange buildings actually quite large and big. If you think about the one in Cape Town, right, or even the Rosebank one, and I saw one in East London the other day, I was like, geez, it's a lot of empty space, because fiber doesn't really consume that much in terms of capacity. So you could potentially, use those ones as well. And the build would come at the back of just the equipment that we're rolling out into those. That's the opportunity we see.